All right, traders. This is Blake Morrow. You are listening to listening to the Morning Edge webinar. Wow, what a night overnight! So let's first of all let's talk about why the dollar came under a lot of pressure, I've been initially the reason why the dollar took so much heat was the dollar yen. I mean, the dollar yen. I'll come back to the Aussie here in a second, but here's the dollar yen. The dollar yen fell aggressively to 105.50, and we are at the breakout point, which is really interesting. The breakout point from the end of 2013. This yellow line has been here forever. Like I said, I was telling Polly, I think we've had it on here for maybe 6 months or so, right? And we finally hit it. I mean, we came within 8 pips of hitting that. Now, I don't know if the dollar yen's going to stop here, but this has been a long-standing head and shoulder pattern, 38% retracement, breakout point, yellow line. We had a 786 that was just, 786 retracement right here. And all in all, we're right at, we came right down to it today. I mean, like I said, within like 8 pips. Crazy, huh? Like, boom. Now, I don't know if the dollar yen is done yet, but that ultimately is what broke the dollar. And I will tell you this, guys, if we break through 105 and we get a nice foothold below 105, we're probably going to see 100 yen rather quickly. And see, that in itself scared the crap out of me yesterday, because if you think about what had happened yesterday, this is what we look like. Dollar yen has just fallen aggressively, and we were just holding around those lows. And you guys, you've heard this saying from me about 1,000 times, so I'll say it 1,001 times. What does not go up usually has only one other direction to go. If it doesn't go up after falling like this, it's probably going to fall some more. And we broke down, and I was like, I figured that was going to happen, and that's why I had to just reduce all of my dollar positions. Again, I'm long the dollar Canadian, I'm short the euro dollar, but that's it. I didn't want anything else out there, and so I had to just take everything off the board. Like I said, fortunately, I had some cross rates that took up some of the losses for the dollar. The dollar. But hey, net, I'm down. I'm down, and even though they weren't huge positions, it still hurt. Because I was in them for quite some time, and I've had the dollar Swiss go from a very, very healthy positive trade to a negative trade. So, But the problem was the dollar yen, and I think the dollar yen is still an issue. It's so close to support; it should bounce here. It should. But it hasn't yet. But if you want to know why the euro dollar spiked up, because of the dollar yen. Now look where the euro dollar stopped, and this is a big deal. Here, let me grab the bias chart because we actually need it. Here, let me grab that. Let me just grab the bias chart because we actually need that here. There we go. All right, so. If you look at the dollar, the euro dollar, we came right up to where we thought we were going to. I mean, these lines these are not new to my chart. You guys all know that we've had these trend lines drawn forever, from the flag pattern, okay, to breaking down and not breaking into new lows because everybody got way too bearish, the euro, and everybody was too aggressively hoping that the Fed was going to continue to raise rates, and that reversed us. And when we stopped that first move here in February or whatever it was, when we rallied to 113.50, I go, oh my God, we're at the underside of this trend line. Boom, we stopped and we reversed hard. We created a channel low, which if you look at these trend lines, it's just identical, same trend lines. So it's a pitchfork. If you guys draw pitchfork patterns, which I don't, but it's all basically a pitchfork. We're just right back up towards that underside of that trend line, and we actually hit the 161. Check this out, 161% extension. We hit the hourly channel high. I say channel high because if you take the support, this one right here, connect the hourly lows. We did this yesterday. You copy it, you paste it over here. That's the highs. And that was the channel high, channel low, hit the 161% extension. We hit all that confluence and we reversed. Now, is the euro done today? Is it finished? I don't know. I'll tell you, if we break back below 115.30, I'm going to pretty much write the euro off for a move back down to 114 and change before NFP. But we're going to have some pretty key support at 1550 on the way back down. I'm writing this stuff down so I don't have to repeat it 1,000 times. So 1550 is going to be key support today. And then resistance, which is even more critical, is 116.15. Okay, that is, if we break, and by the way, we will get out of the range and turn bullish if we break through 116.15. Just letting you know, because even though we still have this resistance at 117. If we break out of the pitchfork high here, this is a pitchfork, by the way. I keep explaining that to you, but if we break through here, we're probably heading towards the low 120s. You guys with me? Okay, you understand what I'm saying here? Hold on, my TV just. In my study. I'm in my office. Hold on. We have like the wireless direct TV, so this receiver is farther away from the modem. It's the furthest away, so every once in a while I lose my signal, and I just did, so stand by. Okay, putting it back up. All right, so anyway, so what I'm trying to tell you here is if we break through this 116.15, 116.20, we're going towards the 120, 122 level, in my opinion. I don't know if we're going to do that, at least not today. I think if we do that, it's going to be a situation following non-farm payroll, not necessarily right now. Okay? All right. Now, so there's the euro dollar. Now I also need to go back and let's just do the yen really quick, because obviously 105.50 is major support. I mean, when I say major support, that is the breakout point. That's also the retest from mid 2014, breakout point from beginning of 2013, and that comes in, what's the low there? 105.19. So I'm going to say support in the dollar yen, 105.20, 105.50, and it's major. Okay, I think you guys all understand how big that is. Now, as far as the dollar yen goes, this is the whole. I'm pointing out the dollar yen because this is the whole reason why I think that the dollar came under such pressure. We have to take out 116.15. I'll just say 106.20 to take the downside pressure off. We are in a bearish trend. Okay, let's go to the cable. So did you guys hold on one second. The pound. Did you guys see that chart I tweeted out yesterday on the cable? Did you guys see that? Here, it was this chart. Let me go take a look at this. No, not that one. You guys see this chart from yesterday? Where I'm just trying to find out when I tweeted it out on Twitter. Here. You guys see that one from yesterday? That was the butterfly in the cable. You guys remember that one? Do you guys know where we stop? Look, I tweeted that yesterday. 147.50 would be the very end of that butterfly, right? I removed the formation, but I'll draw it again. I had it right there. Look at that bad boy. Want to talk about holy cow? I mean, we stopped. We overshot it obviously as the dollar weakness came in, but man, and you know what's scary about the cable is if you look at the pound now, this is the pound's at risk of breaking lower now. See, we broke higher out of this ascending wedge, which doesn't normally happen, but we had so much dollar weakness come through, it did. Okay. The risk is, and here, let me remove that. Let's remove that. Let's remove this. Okay. Okay. You see the triangle pattern? That's the minimum expectation out of the triangle pattern. We did it. The problem with this cable is if we did this, we are now at risk of doing that. We are now at risk of breaking lower. So where are we at right now on the cable? We're at key support. Yeah, so Ahmad said another fake out on the pound. The pound's pretty efficient at giving us false breakouts. So I'm going to write down that this is really key support right where we're at, 146.50. I know we're on it, but then the next comes after that. I mean, you're talking about 145.75 maybe. I mean, we're on support right now. 146.50. Okay. The support resistance is now critical at 147.70. I don't think we'll get anywhere near that today. Okay. We don't have any data coming out today. That's the problem. We don't have any data coming out today, and so there's nothing for, like, if I'm a dollar bear, there's nothing for me to hang my hat on today. Like, oh, hey, that was a weak, that was a weak, piece of data. So I'm going to short. When I look at the cable, look at this potential. If things reverse, look at that potential reversal there. That's a gravestone doji. That could be a shooting star by the end of the day. Who knows? Especially if the dollar really starts to gain some strength. Big reversal there. Okay, that's setting up. Let's go over to the Swissy. So I did get out of the Swissy yesterday, and then, I rightfully so. I'm worried that the dollar yen continues to break lower, and if the dollar yen continues to break lower, it is going to take the dollar down with it. I mean, against most currencies anyway. So I know I wanted to hang on to it forever, but I'm not really too keen on the risk aversion that we're seeing right now. Okay, it's making me very nervous. So we have Okay, some support that's going to come in at 94.20. I think that's going to be pretty significant support. And just like we had written down yesterday, we're going to have to get above 95.80 to take the downside pressure off at this point. Okay, so support is at 94.20. It's 127% extension, and 0.9580 to take the downside pressure off. And we're in a big range. And ultimately, I want to buy the dollar Swiss. I mean, I'm tempted to just go out and buy it today, but I'm more worried that risk aversion is going to start to take hold. And if it does, then the Swiss franc might come, into demand even more. So I'm going to stay away from it right now. But overall, I still really want to be long the dollar Swiss. It has to be the right market environment to be long the dollar Swiss, because when you're short Swiss francs, it's a really nice roll and carry. But like I said, if the market is too risk averse, then if the market's too risk averse, then next thing you know, we're going to be trading down at 92.90 cents again, somewhere down here, Then anyway, so there's the dollar Swiss. Why I exit, and it stinks too, because I had such a nice profitable trade turn into a negative trade. It's a shame. I've done that twice now. Once with the Aussie New Zealand, and then with the dollar Swiss too, and it's really very frustrating, but it happens. I mean, and if you don't think it happens to people like me, then you're wrong. That it does happen. It's just being able to brush it off and continue on. All right, now we're also going to, real quick before we go on break, because we covered the yen. Let's cover the Canadian. So the Canadian, I am still long. Now, we came pretty close to my stops overnight. My stops are at 124.50, well, just below 124.50, and we went to 124.58, I think, 124.60. We created a nice hammer, which is great. We are in a descending wedge, which I've just been watching us just drift and keep hitting this lower trend line. But the reason why, because you might say, well, hey Blake, why didn't you close out of your dollar Canadian? Why did you hang on to the dollar Canadian? Can anybody tell me why I hung on to my dollar Canadian versus not hanging on to like the Swissy or something? Yeah, oil. Oil was and is falling. So, if I look at crude oil came out of an ascending wedge, right? Crude oil came out of an ascending wedge. We, hit a bunch of resistance, even on the front month contract, which I can go to. We're coming out of that ascending wedge, and I think crude's, you can kind of stick a fork in it for right now. So for me, oh wow, the cable is so heavy. For me, hold on, I just added a little bit to my euro pound too. For me, I said, well, if crude oil is going to roll over, and if there's risk aversion, the dollar Canadian tends to act really well during periods of risk aversion. And because crude will sell off, dollar Canadian tends to go up with volatility. It's very similar to the U.S. dollar Mexican peso as far as risk aversion goes. So and I did get out my U.S. dollar Mexican peso, by the way, because the peso is a little too erratic for me. Considering what I was going to do, it's like, okay, well, I'm going to hang on to the dollar Canadian. I don't want to hang on to the dollar peso at the same time. I got out of that one for a loss last night or yesterday, and so I just wanted to reduce to a couple of positions, and dollar Canadian happened to be one of them. Now the dollar Canadian is in this descending wedge, but check it out. Okay, if we First of all, we have to get above this 127.50. That's like no if and or buts to really reverse it. But 126, and then after that 126.75. Okay, 126, 126.75 by the time we get up there. So those are key levels of resistance now. 126, 126.75. Here, I'm going to actually put the zeros in there. Okay, we are still in a bearish trend, but we will threaten to go back to neutral if we come out of the descending wedge, which I feel we are. Like I said, crude looks like it's rolling over. Crude looks like it's rolling over. I think the dollar Canadian can at least spike at least into 126.75, which will be the descending wedge trend line, at least. Okay. Support. So you saw that big hammer, huge hammer on the 4-hour, huge hammer. So that means 125.30 dips to 125.30 should be very well supported, which will be right here, right? So there's going to be traders looking to get long on dips now. 125.30. Question is, do we come back down there? That'll be supportive on dips. Okay, guys, I'll be back in a few minutes, and when I come back, we will do the Aussie Kiwi dollar index, everything else too. Don't go anywhere. Ooh, dollar spiking. Ooh, be right back. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I'm a little concerned about the euro dollar right where we're at. I think I'm gonna take a loss in the remainder of my euro dollar. Just because I don't want to deal with it right now. I'm not comfortable with it since I'm going to be I'm actually starting to short some euro pound. So I might deal with that a little bit later. As we get down to really quick, as we get later into the day, especially if we get a nice reversal. But yeah, I'm not going to deal with the euro dollar right now. I'm short the euro pound, and I'm going to stay long the dollar Canadian for now. And because I think the dollar Canadian's just a great long at this point. So I think I'm going to just do that for now. Okay, and let's go ahead and go into the we're going to go into the New Zealand dollar. Okay, here's the New Zealand dollar, and right now the Kiwi, man, I'll tell you, this is a real risky situation for the Kiwi. We basically went out and hit a double top, okay, in this channel. All right, you guys see it? Now, this will be a big deal for the next, it depends on what the dollar does, obviously, but if the dollar continues to strengthen from here, like let's just say over the course of the next, hold on really quick. Sorry, just I'm looking at the euro pound. I'm gonna be adding to that a little bit here in a bit, but we have this like key resistance here, and if the dollar really starts to gain some strength after this week, that'll put a big double top and possibly in play, but not for right now. Okay, so right now we have to figure out what is the fibs from the low to high. Okay, so figure out where the low is to high, and we are at not even a 38% retracement. So 38% retracement comes in at 69.60. This probably will uh, you know, halt downside for today, I would think. And that comes in at, yeah, 69.60, which is not too far away. Now, if we can break through that, the next support will be 69.30. So I'm going to write both of those down. Point 69.30, 69.60. Okay. Resistance. You have to imagine if you're stuck on the long side of the Kiwi, especially like in European trade, like you're like, oh, here we go, we're going to rally to new highs. You know, where is it that you like say, oh my God, I'm so happy we got back up there? So that means any rally back to like 70.25 should find resistance. We're in a range. Okay. Now, out of Australia, we actually had the RBA. They cut rates unexpectedly, and oh my God, the Aussie has just come under some intense pressure as a result. All right. So here's the Aussie dollar. Okay. The Aussie dollar just broken in new lows briefly. This is also horizontal support. You can see it right here. Okay. This is going to be really critical as we're moving lower. So that comes in at 75.45. I'm going to write that down because after that, we have to do this. Hold on. Oh, no, that's right. 38% retracement comes in at 75. So we go, support is 75.45 and 75. So 75. 75.45. Okay. Support. All right. Resistance. Well, we're not going to see this again. Not today, I don't think. I mean, we'd have to have a really big meltdown in the dollar in order for us to see that again. So now, these spikes, like right up here, I mean, anybody who got long on this dip, thinking, "Oh my God, that was the best buy in the world," they're probably concerned. So now, any move back up to 76.30 is going to find sellers, no doubt. 0.7630, and that is in range. And the RBA, I mean, this is the lowest. If you look at RBA rate, and let's go to historical rates. I think we are at record low levels for the RBA, if I'm not mistaken. Where we're at here with the RBA, because now the RBA is at 1.75%. So, I mean, that is historically, like I think in history, the lowest rate we've ever been for the RBA. From what I read, and I'm not 100% sure about that, but I'm pretty sure that that's the case. All right. So, with that being said, this Aussie is, it's in trouble, and it's going to be in a lot of trouble should we start breaking lower through 75 cents. All right, let's take a look at the dollar. So here's the dollar, and the thing that freaked me out most yesterday is that we were down at support and it looked like we were going to break lower. And my suspicion was right, but what we are getting right now is a hell of a bounce. Now I don't know if this bounce is going to be is going to follow through. I'm obviously not 100% sure about that, but if you look at the daily candle now, we're trying to develop a hammer, and if we develop a hammer on the daily candle for the dollar index, I mean we could have posted a false breakout by the end of the week and really start ramping higher. We surpassed a lot of fibs. We are below what I consider key support. All right, and let me see if I can go over to a daily, and let me do a little bit of work here. Low. That's past the 161% extension there. I mean, we're at levels that probably freaked not only me out, it freaked out a lot of people. The thing I was most freaked out about with the dollar is we fell and then we just sat, and I'm like, oh man, this is going to have follow through, and that's why I just was done with it. Anyway, the low, which now is at 91.90, is major support. And based on what we're seeing here, I don't know if we're going to revisit that support. I really don't know if we're going to revisit that support because we have developed such long wicks. All right, but what's going to take the downside pressure off of the dollar? Let's figure that out. I think we're going to have to rally all the way back past 93. So if we rally past 93, that's going to take that downside pressure off. And I may, I've got range for today, but we are threatening to turn bearish. Depends how we close the end of the day. If we close the end of the day down in these levels, then we're going to have to turn it to bearish, okay? But overall, we might just be at the lower end of that lower end of the range. All right, let's take a look at the now this one. I've been kicking myself all morning for not being in the US dollar Mexican peso, but look at this freaking reversal. I mean, huge rally off the lows. I took a loss in this, but hey, it is what it is, and I had to reduce risk, in my opinion, and so I did it, without hesitation. It stinks that it was, but it is. But like I said, it is what it is. All right, this is key resistance right now. That comes in at 1748, because if we break that, that opens the door to a lot higher levels. Now, in order for us to continue to break higher like that, it has to be because of risk aversion, in my opinion. All right, has to be because of risk aversion. So, 848 is resistance. Oops. Dang it. Jeez. Helps if I can type, huh? I'm still in the dark, by the way, in my office, so that might explain some things. All right, now support, we'll be back here at 1730, right? Or actually 1729. This is where support will be now. And if we get back to 1729, I might be a buyer. All right, let's take the last two, which will be the Nordic currencies. Here's the US dollar Norwegian krona. What a bounce off the 161% extension. By the way, I think the US dollar Norwegian krona, oh, it did not complete its head and shoulder pattern yet. Pretty damn close though, isn't it? We almost hit the bottom there of that channel. 161% extension, that comes in at 790. What's the low? 797. We already bounced aggressively, so that is major support. With crude coming down, it's probably good long. I'm not long right yet. 7.97. A dip below 8, and I might get long in the US dollar Norwegian krona. Resistance. It's right here. 808. Yeah, 808.50 actually. 8.0850. And do I dare put it in a bearish? Because if I do it, you know it's going to turn bullish. Let's go into the U.S. dollar Swedish krona. So Sam, who might be listening in right now, he threw out a very interesting chart. He was looking at these equal legs, right? You notice here. Let's remove this really quick. Let's remove that. You'll notice that take this high to this high, right? Go like that. Take a look at that support, right? Boom. Wow, look at the euro. It's coming under pressure. Look at the Canadian, baby. Man. Anyway. So we may have equal legs, channel support. So the daily candle set up a really nice hammer. So the low is at 789. And resistance is now at 803. We are at the we've broken below the lower end of the range, but I'm going to write down range because how about if this is the range that we're looking at? Um, Matter of fact, I don't know if Sam's here, but I'm gonna tweet out this chart too. I'm gonna CC Sam on this because he sent me out a chart yesterday, and I thought it was really interesting. Let's see what's today. Uh, that's really key support, I think. Really key support here, especially if we can hold. So dips back down to like 795 might not be bad to be on the long side, frankly. Um, okay, there's your bias chart, and oh my gosh, we've had a lot to talk about today, haven't we? Geez, I only have a couple minutes.